Okay, here we go. We are live.
We're
I'm
live.
going to give everybody a few minutes to trickle in here. But while people are logging in, we are going to run a short little poll here. And what do your clients care most about? Customization, tax efficiency, or returns? Take a minute. It's in the bottom left of my screen. Hopefully that's where it's showing up for everybody else. Go ahead and put in your answer here. Type 1, 2, or 3 in chat to make your voice heard. So
We want to
give
see
everybody just a few minutes as we kick into gear. And yeah, again, you can add comments. Everybody who's watching, drop a comment in, vote in the poll. What do your clients care most about? And in just 30 more seconds, 45 seconds, we'll get going. We'll actually dive in to the content today. So drop your response and tell us what you think or what your clients think. I suppose is the better way to say that. Okay.
I think people are still coming back from their lunch break here.
I know. Oh, there we go. Somebody answered it. Thank you so much, whoever it is that got us started. Everybody else, don't be shy here. You don't even have to tell anyone else how you voted. Just drop a 1, 2, or a 3 in the chat, in the comments. What do your clients care about most? Customization, tax efficiency, or returns? We're just curious to kind of hear what's important to you and what your clients are telling you. So, okay, I'm going to jump in here and let's get started. You guys can continue dropping your votes in there as we go, but welcome to our live event. We've got that live poll running, so cast your vote. We will look at the results in just a little bit here. But hello. Yes, the title is real. We are going to create a custom index in 5 minutes or less. I'm going to time it. Got my little stopwatch on my phone. So I'm going to pull that up, and you can call us out if it doesn't happen. But I'm Johnny Sandquist of 3 Crowns Marketing. I'm a fractional CMO and marketing strategist for fintechs and advisors, and I am your host today. The real star of the show, though, is this man over here, Josh Harris. He's the VP of Growth at Alphathena, an agentic direct indexing and portfolio management platform for advisors. So, Josh, super excited to be here with you today. How are you feeling, man?
Feeling great. Happy to be here. Thanks so much for joining me today, Johnny.
Absolutely, man. I'm excited.
Yeah.
Okay, so good deal. Couple of house cleaning items before we dig in. We are obviously recording this webinar, so you will get the file afterwards. So if you missed something, don't worry. We're also going to save time at the end for Q&A. So drop your comments and questions in anytime. We'll grab them at the end. So, whether you're watching on YouTube right now or through the StreamYard platform, just leave a comment. I'll find it. Okay, so poll results real quick. More people care about returns and tax efficiency, and no clients telling advisors right now that they are looking at customization. So I'm going to go ahead and hide that poll, pull our names back up here. And okay, last part of my intro, because I know everybody just wants to get going real quick. Here's what we will cover in the next 30 minutes. We're going to start by talking about why direct indexing is having a moment right now, how insourcing versus outsourcing investment management can be an important value add, and then we will do a live demo of creating a custom index. Okay, so Josh, before you dig into the demo and show us exactly how easy it is to create a custom index, set the scene for us, right? What's going on with direct indexing? Why is this an important thing for advisors to consider right now?
Yeah, all very good questions. It's no secret that direct indexing is a very hot topic in the wealth and investment management space. I'm going to share a quick slide deck here, kind of walk you through why it's become so popular, how the strategy has been implemented, and why Alphathena is taking a very unique approach at direct indexing. So without further ado, I'm going to hop in. At its core, direct indexing means owning the individual stocks that make up an index directly instead of buying a fund that holds them for you. So instead of purchasing an S&P 500 ETF, for example, a client might own a curated basket of the underlying securities in their own account. And so it's giving you the same market exposure, right? But now with something an ETF can't give you which is control. And so we believe that control over those underlying securities kind of unlocks two things that advisors and their clients care most about, which are tax efficiency and customization. So the first, let's touch on tax efficiency. When you own individual securities, you can do what's called tax loss harvesting, and that's done at the individual stock level. Now, that's selling a position that's declined while the overall portfolio is staying exposed to the broader market through a similar security. So those harvested losses can offset taxable gains that are realized somewhere else in the portfolio, therefore reducing the client's tax bill without meaningfully changing their overall investment posture. Right. So inside of an ETF, that's impossible because you're just owning one security. And I'll just back up a little bit. The fund manager of that ETF or that mutual fund makes those decisions, and so the tax consequences flow to every shareholder equally, regardless of when they bought in or what their situation looks like. So when you tax loss harvest, you're reducing your overall tax liability for a taxable account by selling off those losses relative to the gains. The second is personalization. Just a quick example here, Johnny. A client who works at a tech company might not need more tech exposure in their portfolio. A client with strong ESG values shouldn't have to accept whatever a fund holds. They should be able to exclude specific business activities like tobacco or firearms or gambling because they don't necessarily want that implemented in their portfolio. They can exclude specific securities, sectors, business activities, like I mentioned. And one use case that we hear a lot about on the personalization side is a client that might be sitting on a concentrated position in one sector, and they need a portfolio built around that, not in spite of that. So direct indexing makes all of that possible at the individual security level. And I really love this little analogy down here. It's like creating your own curated playlist of songs instead of being forced to purchase a band's entire 10-album discography. We all know and like creating our own playlists because it enables us to listen to what we want to, instead of having to go and find those songs that we really like. So it's a really good comparison there. Moving on to the next slide, I want everybody to take a look at this figure right here, this statistic, and let it sink in. 25% of passive assets are expected to shift into direct indexing and personalization by 2030. We're talking about trillions of dollars here moving out of generic ETF wrappers and mutual funds into individually owned tax optimized portfolios. And so this isn't a niche trend anymore, but rather a structural shift in how wealth is being managed, and it's already happening before our very eyes. So the question that we get or that we want to provide for everybody watching right now, all of our attendees, is it's not whether clients will want this. It's how are you going to implement this? How are you going to be equipped to deliver it when they do start asking for greater tax efficiency and control and personalization in the portfolio?
So, Josh, real quick question for you. When you're talking about implementing that, and we saw from the poll at the start, right? So people said like returns and tax efficiency are the concerns clients are asking about. What's the best way to implement direct indexing? Is it an in-source solution? Is it outsourced? Like, how are advisors tackling this, and how's Alphathena approach that?
Yeah, well, I will say historically it's been outsourcing. We've taken a different approach with insourcing, and I just want to briefly touch on something. I spent the last decade of my career in wealth management. My honest take on where we're at is uh, the wealth management industry is most responsible for personalizing someone's financial future. And historically, they've been one of the least personalized when it comes to how money is actually invested. A client gets custom financial plans, they get custom estate plans, custom tax strategies, and then they get hit with a model portfolio that looks exactly identical to the one sitting next to them. And so for years, the answer has been to outsource, hand it off to a TAMP, a third party SMA manager, or a black box overlay provider. So the advisor here gets a solution, but they lose visibility, they lose control, and occasionally it adds in a fee layer that quietly compresses client outcomes. So the personalization story stays with the provider, not the actual RA or the firm itself. And so that's the gap that Alphathena was built to close, Johnny. We're giving advisors the infrastructure to bring direct indexing, tax loss harvesting, concentrated position management, and cash management, all in house. So custom indexes, household level optimization, full lot level visibility without the operational burden that used to make insourcing impractical outside of the largest family offices out there. And so RAA's clients, their strategies and their relationships are all available on our platform. And so the technology exists to treat every client's portfolio the way that their financial plan already treats them as a unique situation worth solving for. And so that's our perspective on where the industry is headed, and the insourcing versus outsourcing argument. Insourcing is not for everybody, but for the firms that want to retain control and customization over their clients' portfolios, and do things very efficiently in-house and differentiate themselves in a crowded market, insourcing might be for them. And we feel like we've enabled them to do that in a very user-friendly manner with Alphathena.
Awesome. Thanks, man.
Yeah.
Very in-depth answer. Do it at scale, right? That's everybody's favorite phrase right now. So
efficiency at scale.
Yeah.
That's what we're all about.
Yeah.
And so where Alphathena is at right now, Johnny, the evolution of personalized investing, to us, it has its own unique story. We feel like our personalized investing platform has gone through kind of 4 phases or eras, if you will. Phase 1 was providing access. It was establishing a system that made direct indexing, tax loss harvesting, and tax efficient transitions possible for more than just the largest institutions. So that was like our light bulb goes off democratization moment here at Alphathena. Just creating the platform that advisors can use. Phase 2 was kind of workflow orchestration. So connecting those tools into end-to-end investment workflows, and just kind of expanding everything a little bit, the use and the adoption a little bit further. So unified optimization, AI enhanced processes. So these systems and workflows and functionalities start to kind of talk to each other for the advisors that we're supporting. Phase 3 is where we're at today, which is workflow automation across kind of the full investment management lifecycle using AI agentic workflows and frameworks. And so these are intelligent workflows that reduce the manual touch points that have always been the bottleneck in personalized portfolio management. This is where we're at today. And phase 4 is kind of where all of this is heading. True personalization at scale, AI agents that are effectively replacing the SMA model, some of your legacy platforms out there, giving advisors the ability to build and manage customized portfolios for every client, not just the ones with a $5 million minimum account. So Alphathena is our roadmap is constantly evolving and growing. We're purpose built for these later phases right now, and building towards a future where we're making things as simple and efficient at scale as possible for these advisors. So those advisors that adopt technology and solutions like this are truly the ones that are going to be in the best position when the industry fully gets there, Johnny. So that's kind of where we're at now. And a little bit of history on the firm. Our team here's the leadership on the screen here. And I think really the pedigree speaks for itself. Vanguard, MSCI, Bloomberg, Oppenheimer, PwC. Our team has decades of experience building and operating the strategies that Alphathena delivers. We've sat on the other side of this table. So, in the wealth and asset management space, and we've effectively built the platform that we wish we had in our previous roles.
Awesome.
Yeah.
That's
I'll
fantastic background, man.
Yeah.
You ready to kind of move into, I think, what everybody's really here to see?
Yeah, let's do it. Show some fireworks here.
I'll bring us back to the full screen so you can queue up your demo.
Yeah, thank you.
But yeah, I mean, can you create a custom index in Alphathena in under 5 minutes? That's the title of the webinar. That's what we're here to do. I am going to time you, so I'm going to pull up my stopwatch on my phone.
Yeah.
All right. Count you down. I just got to find my stopwatch. Here we are. It's going to be like this. You're going to be on the clock. It's like the NFL draft this past weekend.
That's right.
You've got 5 minutes to make a pick.
All right.
Okay, you tell me when you're ready, and I'm going to start the timer.
You can start now.
Go ahead.
All right. So really quickly, we are Alphathena is a web-based platform hosted on the cloud. We use AWS. When you log into the platform, so it's for every firm that we work with, it's a private deployment. You'll get your own user access tied to your email and your domain. When you log in, you're going to see this dashboard, kind of an overview of your firm, accounts, total capital, what's invested, any activities that you need to do. I know I'm on the clock and it's winding down. So let's just hop into creating a direct index. This is our create tab where you can create your own custom personalized index. And there are a few options on how you choose your starting universe here. We have over 1,900 ETFs and indices to replicate when you're creating your direct index, or you can upload your own model or ticker list. Some firms like to be a little bit more active in how they manage their strategies, so they can upload their own ticker list here. For the sake of demoing today, let's use just the S&P 500 or SPY as a starting point. So you'll notice that all 502 securities, you've got Google and Berkshire there, the other two, all 502 securities are loaded up in here. So you'll see all of those and the market weights, index weights, and equal weights. Customizations are going to be here on the left-hand side. So you can control things like fundamentals, weighted average cost of capital, beta, market cap, factor screens, right? So we have all the factors here. Valuation, growth, yield, free cash flow yield, dividend yield, ESG. All of our ESG data is powered by Morningstar Sustainalytics. You can dial up any one of those pillars there, the overall ESG score, and you'll see the portfolio reflect those changes in real time. And then you've got your standard inclusion and exclusion filters, starting with sector, going to industry, sub-industry, business activities, all the way down to individual tickers, right, Johnny? So let's say you have a client that worked in financials. They worked for a big bank in the past, and you don't want to hold any financial stocks in their portfolio because they might hold a large financial exposure in one of their retirement accounts. Maybe they don't want to hold a specific ticker like Tesla in their portfolio. You can start to customize this however you want. Maybe it's your firm's unique investment philosophy, or maybe it's unique to the client. Whatever it is, you can click customize, and your direct index, your securities, your basket of constituents is going to reflect those changes. So now we have a basket of 425 securities. You're excluding financials and Tesla. And we can take it a few steps further. So customization on the left-hand side, optimization is going to be on the right-hand side. We're going to set our smart weights objective as minimizing the tracking error. What that's going to allow us to do is reduce the number of securities in here to any number. We find the sweet spot at generally 100 and above. We're going to drop it down to 200. I'm going to apply the optimization, and our optimizer is going to do a lot of the work in the background to both reduce the amount of securities in there, but also reweight them in a manner that gets us the same exposure, close to the same exposure as the S&P 500 with 302 less securities now, call it 300. So here's your tracking error, 88 basis points. That's pretty solid when comparing it to the benchmark. And here's your direct index, Johnny. 200 securities, excluding financials, excluding Tesla, replicating kind of the S&P. I don't know how they're on time.
I'm stopping the timer right now. So we're at 358.
All right.
I mean, that's really fast when you know what you want to do.
Yeah.
You can get it done fast, right?
You can, you really can. We have over 50 different dimensions that you can support when you're that we support when you want to customize your direct index. And I know I talked a little bit about the platform at the beginning. So we're gonna call that just about 3.5 minutes, Johnny.
I do think we can give you some leeway there.
Yeah, give me some buffer time there.
Okay, so obviously, you delivered on the promise that you can do this in under 5 minutes, which is awesome. But now talk to me about after index creation, right? So now you want to assign that index to an account, you want to rebalance it, you want to tax loss harvest, do all the stuff. Is the ongoing portfolio management, is it just as easy as the initial index creation? We don't have time for everything today, but give me the 5-minute look at how Alphathena handles then the ongoing management aspect now that you've got that index created.
Yeah. Good question. So saving your direct index is fairly easy. You can call it whatever you want. I'm going to call it Johnny's S&P 200, X financials, X Tesla. You can make edits to that, save as new, create, kind of replicate the existing direct index you've saved. You can back test at it, look at these visualizations to determine, what the sector weights are, kind of how it's made up. And then implementation to your question, Johnny, is fairly straightforward. You have kind of three different options when you're leveraging this new direct index strategy that you created for your clients. You can take the direct index and add it to a model portfolio alongside ETFs, mutual funds, single securities, other direct indexes. It's as easy as just adding the direct index, setting the weight, the allocation alongside your the other components or holdings within that model portfolio and saving it. So that's another strategy that we see a lot of RIAs leverage when they're creating their overall investment strategies and kind of laying them out before they actually implement. So I'd say that's an option if you didn't just want to invest a certain amount of capital or transition positions over to your direct index. I want to show you quickly how to invest a cash account or position into your direct index. So let me find a demo account here. And I'm going to back up really quickly. We're custodian agnostic. We do integrate with some of the major custodians out there: Schwab, Fidelity, Interactive Brokers, Raymond James. It's a bi-directional custodial integration, meaning we're ingesting data from the custodians directly via data feeds every morning. And then trades, you're placing trades on our platform. We are a portfolio management system. So we connect with back to those custodians via what's called a fixed connection, which enables you to submit trades directly from our platform to the custodian. So you don't have to worry about downloading trade files and submitting them to the custodian. We work directly with them. You can download those trade files if you need to, but the cleanest way for submitting those trades and having them execute automatically is via that fixed connection. So this is just a paper account that I have. If I was integrated, my Alphathena environment was integrated with one of the custodians, you would see your client accounts here. Again, this is just a paper account with $510,000 in cash. I'm going to deploy all of that capital to your direct index, Johnny, and create the draft order set here. What you're going to see here is a proportional allocation of that capital to your direct index. So you'll notice here all of the positions. The index or model source is your direct index. Here are the weights, the allocations, the prices, units. And you'll notice of the capital requested, almost all of it has allocated. Almost all of those positions have allocated. And so here's kind of your pre-trade draft order set. the analysis, if you will. And you can preview the orders, send them as block orders if you'd like. We have block trading. We support block trading with those custodians that I mentioned earlier. And you can go ahead and submit those orders. Once you submit the orders, your client is now your client's cash, the cash in their portfolio is now invested in that direct index and ready for tax loss harvesting, rebalancing. If you need to manage the cash position there, you can do that. So that's one way of investing into your direct index. The alternative way is if you have a client or a prospect that has an existing portfolio and you need to kind of simulate what it would look like to get into that direct index, unwind concentrated positions, fully migrate over, our transition tool is a very helpful solution in managing that. And so you can create scenarios or use Athena AI, which is our new agentic portfolio transition tool, to select that account, work through any constraints you might have, like capital gains budgets, and ultimately analyze what it takes to get to your target portfolio, which is your direct index or your model. And a lot of times the advisors and portfolio managers will analyze their clients' tax budgets for that given year, and determine how much of the gains in their portfolios, if any, they want to realize right now. So this is a really helpful solution for existing portfolios, not just the cash positions like I covered in the invest tab. From there, you'll use our workflow day to day to uncover opportunities to tax loss harvest, rebalance. You can set up cash management alerts in there. So if a client needs a certain amount of cash withdrawn on a frequency, this is a systematic kind of rules-based task manager, or way of getting in there and handling your day-to-day, those activities at scale in a fraction of the amount of time that it historically took you to do so. And so to come full circle, Johnny, this is kind of what we're talking about when we speak to efficiency at scale. Tax loss harvesting in an individual account with a spreadsheet might have taken hours. Now you can do it across 7 or 8 accounts, in under a couple minutes, as quickly as it took me to create a direct index. We can tax loss harvest.
That's awesome, man. I mean, nothing I love more than clean UX in a software platform where you can just kind of like hit on what you need to do, have it shown to you, and get it done. Like, I know nobody likes to spend their entire day just like clicking through fields. So very, very smooth demo, man. Thank you for going through all that.
Yeah, of course. We're constantly focused on making the platform as user-friendly as possible, but also efficiency. And we welcome client feedback. We're doing monthly enhancement releases. And so a lot of what I've shown on the platform today, Johnny, has come from client feedback. We're able to iterate with our very nimble solutions and engineering teams.
Absolutely. Now, we are close to time, so I want to move us into the Q&A section. And anybody who is watching, if you've got a question that you want to ask, go ahead and use comments to drop a question, and we will pull it up and address it. But Josh, I've got a few to ask you here right off the bat. And I think the most intriguing question to ask you is, so an advisor has outsourced, to a TAMP for years, or maybe they've been working with like a legacy player, like Parametric. How painful is it to like unwind all that and move to something like this? Like, is it a very long onboarding, data conversion? How's that look for an advisor?
Yeah, so onboarding with us is very straightforward. It's seamless. We can onboard in, depending on how these firms are currently set up, around 2 weeks to a month. Shouldn't take any longer than that. We have a team of onboarding specialists that will help you kind of navigate through the custodial setup and the migration over from any current systems you have. So to answer your question, Johnny, it's not a heavy lift at all. And we can because the positions are being, I'm just using the TAMP example,
Yeah.
because those positions are already being held at the custodian. Since we have access to that custodian, and maybe you don't want to use that TAMP anymore, you're ready for a more robust tech solution like Alphathena. We get the data directly from the custodian, so there shouldn't need to be any sort of in-depth, in the weeds migration process. It's very straightforward because we do get those data feeds directly from the custodian. So we see client portfolios of all types, of all sizes, all ETF portfolios, mutual funds. Maybe they're using an SMA currently, and it really, once everything is set up within the first couple of weeks of using Alphathena, it becomes a really systematic, seamless way of managing those portfolios that you already had with a TAMP or maybe outsourced, just with a few clicks of a button. So,
gotcha. Cool. Always good to hear that there's no like 6-month required onboarding.
No
timeline.
No repapering, no LPOAs. It's a tech only solution. So once we have the wires all synced up with the custodian, everything's pretty much ready to go.
Okay. One more question for you, I think, or at least we'll go to this one next. But a lot of REAs work with more of a mass affluent clientele, right? So like direct indexing, traditionally associated just with that more high net worth, ultra high net worth audience. Does this make sense for clients with smaller account sizes? Like, is there a minimum or anything like that you guys recommend or need advisors to have?
Yeah, that's one of the top questions we get from prospective clients that we talk to. For direct indexing specifically, I'm going to start by saying our platform can be used for any account size. Whether or not you invest a certain account in a direct index, that depends, right? So you can create model portfolios of ETFs, mutual funds, manage your own baskets of securities on our platform. Direct indexing, we don't have any account minimums per se for the platform, but the account size and the capital requested will have an impact on how allocated you get to the portfolio and what the tracking error looks like, right? So we like to see, generally speaking, account sizes of $100,000 or more. Because when you reduce the amount of securities in your direct index, you lose a little bit of tracking error, and the lower capital you have, the harder of a time you're going to have allocating to that specific strategy. Smaller account, call it 50,000, might not be able to allocate to a direct index fully, thus throwing off the tracking error, increasing the tracking error. And so it's going to deviate away from the benchmark a little bit in terms of performance there. So while we don't have account minimums, we do see kind of a sweet spot for direct indexing. We just like to note with all of our clients that they should do the analysis on the tracking error and the allocation before implementing a direct indexing strategy or direct index in their clients' portfolios. So some of the smaller accounts we might see, invested in just kind of a model portfolio or an ETF. But for the larger accounts where it makes sense and the client, you or the client want to incorporate tax loss harvest, tax efficiency, or personalization, direct indexing is certainly a really strong, innovative toolkit for you to use for your clients.
Awesome. Very in-depth answer. Thank you.
Yeah.
Okay. Josh, I know you've got from your slides, the last slide you've got has your contact info on it. So maybe pop that up for us real quick because we are at time. So I'm going to go ahead and kind of wrap us up. But while Josh brings that up, everybody, thanks so much for joining us today. We appreciate you giving us your attention. We know your time is valuable. So if you would like a personal follow-up to what we covered here today, go ahead and email Josh, and his contact info is up here on the screen, josh.harris@alphathena.com. And you can reach out to him and get that follow-up, ask your specific questions, get a more personalized demo, and actually go through your firm's unique workflows and how the platform fits those. So on top of that, please mark your calendars for May 27th. Our next live session is going to be about how agentic AI is changing the way you can deliver tax optimized portfolio transitions. So invite for that is coming out soon. I hope you will be back with us. Maybe my dog will make an appearance next time. He's sleeping right now. I know I teased everybody with that on LinkedIn a couple of times, but we'll bring him in.
Yeah, let's get Gooey on here. He'll ask some great questions, I'm sure.
We'll bring him next time. Take care, everybody.
Thanks, everybody. Appreciate it. Johnny, thank you.
Thank you, Josh.